big correction across the board, especially for the headliners. Nifty is down almost 4% in the 4-day crash. I mean, in the worst case scenario from here on, if the tensions in West Asia continue escalating, oil prices keep rising, and the Fed continues to remain hawkish in its commentary, where do we go from here? How much can we correct, and for the headliners, sir?
See, if we look at the markets, markets were actually bracing for a correction. There's no doubt about it, because some of the factors were looking at because the US. If we first we look at the US data, economic data, that was the jobs data that was coming out quite strong. Inflation concern was there. So that really got out the view amongst the investors that rate cut is not likely to happen in June. So that was something which the markets had factored in and they were living with it. That's fine. The recent developments which happened in April itself, wherein the bombing of the Iranian embassy and then the Iranian attack on Israel, unprecedented, first time ever, and then Israel's retaliation. These are certain things which the markets had, I would say, factored into a certain extent, because there's nothing called certainty, there's nothing called impossible. So markets did factor in that maybe something could happen, but how much of that would happen, how that would impact the prices. And as you rightly said, Brent Crude trading above $90, that signals that inflation is there to stay. And that, as you rightly said, one of the US Fed, I would say, officials also clearly stated that rate cuts could be a distant possibility. So having said that, the markets, these factors have been playing upon the markets. And technically, if you look at the markets are witnessing some sell-off, because earlier the levels of crucial support for Nifty was around 22,200. That's corrected. Nifty is down by almost 300 levels from those points. So if I go back and look where exactly Nifty is likely to find support, so major support for Nifty is around the 21,700, and below that it's 21,400 levels. So these are only two levels to watch out for Nifty, 21,700, because if you look at today's low, that was around 21,777. So 21,700, 800 is a very strong support zone for Nifty. And also Nifty has moved in oversold territory on the daily charts. If you look on the weekly charts, it's not moved yet, but on the daily charts, it has moved. So what that tells me that there could be a temporary bounce back, but whether that bounce back sustains, that's something of a big question. Secondly, if 21,700 is breached, then we could witness a correction towards 21,400 levels. So a 300-point correction is likely once it starts sustaining below the 21,700. If you ask me what the trend is like, the short-term trend definitely remains bearish. Intermediate-term trend is now more or less consolidation. Long-term trend is still bullish. So that's there. And if we look at the derivatives data, there also we are seeing some sort of built up that is happening. So the derivatives data is also bearish per se. And if I look at the other data points which are there, so that also tells me that there has been short built up which has been happening for quite some time over the last few trading sessions. And investors and markets don't really like such sort of negative news flows on a regular basis. So I think these are some factors which are going to drive the market.
Right, and speaking of the bearish factors that we are seeing in the in the derivatives market also, the FII net shorts in index futures, I mean that has jumped to over 1 lakh contracts now. So, and typically when we see such a strong bearish sentiment, the market could potentially see a sharp reversal as well. I mean, is there a potential for us to bounce back from here, considering we have actually corrected by about 900 points in just what, 4-5 sessions?
Yeah, as I said, if you look at the levels, very crucial support zones we are approaching. So there is a respite. There could be a respite, but you have to take it with a pinch of salt. That's something you have to understand, because looking at the structure of the markets and given the news flows which are there, I would say investors would be slightly cautious at the current levels as to how things really take shape going forward, because Middle East is really, I would say, that would be too much to say, a ticking time bomb. But yes, it is a very serious situation out there. which is being trying to be managed by the US and its allies. So we'll have to see. And China and Russia on the other side, they are trying to see what they can do out there. So these are certain events which are currently being controlled to a certain extent, but how long they are able to be controlled and what happens is something which the markets are actually grappling with. The one interesting and important point that I would say one needs to bear in mind is the crude oil prices. As long as we see crude oil prices sustaining on the $90 a barrel, that's Brent Crude, that would mean that inflation isn't going to really come down, and rate cuts, which markets were expecting, not only in the US but across the globe, that could be put for hold for some time. So we'll have to watch out for that, because that's going to drive the entire cycle of interest rates and other factors.
All right, keep an eye out on Brent Crude. If that sustains above $90 a barrel, that could have an impact on what the US Fed and RBI does as far as monetary easing is concerned. That's a word from Mr. Aamar sir. We are also in the midst of the earnings season. After TCS last week and Infosys on Thursday, Wipro, which is India's fourth largest IT company, will report its fourth quarter numbers today, that is Friday. Now, according to brokerage reports, the company is likely to see a 0.4% quarter-on-quarter dip in revenue to about 22,117 crore amid ongoing challenges in sectors like consulting and high-tech. Net profit is expected to increase by 2% sequentially to about 2,747 crore. On a year-on-year basis, however, both revenue and net profit figures are seen falling about 4.8% and 10% respectively. Wipro's operating margin is likely to face downward pressure. This is, by the way, due to the impact of recent wage hikes and overall flat revenue growth. It is expected to fall by about 50 basis points sequentially to 15.5%. Let's talk about what you need to track. Revenue guidance. It could come muted in the range of about 0 to 2% for the first quarter of FY25. Management commentary on future revenue prospects amid ongoing economic uncertainties and sector-specific challenges will also be important to hear. Also, look for commentary on large deal win trajectory, conversion of deal wins to revenue pickup, and the impact of high-profile senior management exits on the business and the recovery of the consulting business. But Aamar, I'll come back to you. So far for the Indian ITs, I mean, it's 1 and 1. TCS was a hit, Infosys was a miss, and if we go by brokerage reports, Wipro is more than likely to join Infosys. I mean, the company has also hit a rough patch. The BFSI segment, which accounts for over 30% of its portfolio, that's hurting. There is a new CEO as well, and the stock price, I mean, they have reflected that, right? It's down about 20% from its 52-week high. So considering all of that, what's your take on Wipro? Is it a buy at the current price point?
See, if you look at the overall IT space, I would say concerns with regard to orders, concerns with regard to revenue, concerns with regard to profitability, concerns with regard to future guidance and forecasts, and rising cost inputs. So these factors have definitely been weighing on the IT stocks, and that is very much visible in the top bellwether stocks, be it Infosys, wherein again this week we are seeing a correction of almost 6%. If you look at TCS, again a correction of 4.5% to speak of. And Wipro, if we talk specifically, Wipro has really, I would say, been a non-performer, because from almost, if you go back in time, as recent as I would say last week of February, the stock was quoting around 545. Currently, it's around 440. So the stock has corrected significantly, and markets and investors are also understanding that generating decent returns quarter on quarter is going to be a challenge for most of the IT companies. So I think that's what the markets are actually factoring in. And Wipro has corrected significantly. Now the question comes, where's the support going to be, from where Wipro could bounce back? So the current levels are very crucial for Wipro. So we'll have to watch out how the results come out and how the markets actually react to it, because these are levels which are very important. If you ask me what exactly is the level to watch out for, so I would say that 430, 440. So the current level is the zone of major support. If this support is taken out, then Wipro could witness some further sharp correction, because the next level of support for Wipro comes around the 415, 420 mark, and below that around 400 levels. Overall, if you ask me, the trend has been bearish for Wipro for quite some time, but these are crucial support zones. So depending upon the results and how the markets actually interpret those results, we could witness some bounce back, but sustaining below 430, 420, 430, 440, that could mean that there could be more selling there in Wipro.
All right, the word on Wipro is stay cautious. We are very close to those support levels. The 430 to 440 is where Mr. Aamar sees, the stock at a crucial support. If the results disappoint, it could fall below, and if there is a hit, it could rise from here on. But the overall trend looks bearish on Wipro. But sir, before we let you go, there is lots to track over the next couple of weeks. We have, the earnings season going on. Of course, what's going on in West Asia is also going to be crucial to track. But we have, begun the first phase of polling as well. General elections are here. What should be the strategy for the next couple of months for your normal retail investors? How should they tackle the market at current, in the current phases of volatility?
I would say that stay light because markets are expected to remain volatile, not only because of domestic reasons, but also because of the international factors and international reasons, which are there to stay. I don't think they're going to go away in a hurry. So markets, you can expect up gap, down gap, increased volatility in the markets. But still India VIX, I would say, is below 14 levels. So I think that's not much today, though it has risen by almost 6%. But that's part of life, that's part of markets, that's part of the way the markets actually behave. So, but yeah, I would suggest that stay light and be slightly on the cautious side, because I would say how the events unfold going forward in the next couple of months, they are going to really decide the future, at least for the next 6 to 8 months, and then we could see how, because US elections, presidential elections are also around the corner in November. So the markets are going to experience volatility as well.